In this video, let's talk about economic recoveries and how does this tie with your investments in the stock market. If you want to know more about this, then check this video out. Hey guys, so we're back again for another deep dive, especially if you're a stock market investor, trader. It's nice to know what's happening and it's nice to learn extra for you to be able to have an additional layer of analysis for how you trade the markets and how you can do it with confidence. So, in this video, I want to answer a question that was sent out by Leia Victoria, who's from Taipei, Taiwan. So, hi Sir Marvin, this is Leia Victoria, an OFW from Taiwan for 8 years now, and I've been investing in the stock market for 4 years. Now, this is my question, sir. This is my first time to encounter an economic recession, and I must admit, I am a bit scared. When do you think the Philippine economy will recover? I have heard of terms V and U-shaped recovery. Can you please expound more on that? Thank you, sir. I'm a big fan. Leia Victoria, Taipei, Taiwan. First of all, Leia, that's a very, very interesting question. I hope I get to explain it well here and I get to give context, especially to those who are investing and trading, because it's nice to also have ideologies on how the economy will recover, because it will allow you also to know and at least give you a pretext on how you're supposed to deploy your capital. Because at the end of the day, it's not just the stock market that's the asset class that's there. And while we are talking right now, US markets have been pushing higher, gold has been pushing higher, Bitcoin has been pushing higher. They've done massively well from where they were at the start of the year to where they are now. And by the way, this video is being filmed August 2020, so whatever data that I'm saying here is relevant to what's happening right here, right now. So guys, if you have questions as well, similar to Leia Victoria, feel free in the midst of this video, just put them in the comment section and I'll try to make videos on top of that. If you have a personal question also similar to Leia, slide a DM via Instagram. And I know I've been getting a lot of questions lately. I've been trying to reply to as much as I can, and I'm gonna do as much also to help you guys and give you as much insight as possible. So by the way, before I begin, my name is Marvin Germo, and this is my first channel in YouTube. I'm a stock market trader and investor, and I've been in the market for more than a decade now. So if you want stock market related analysis, strategy, principles, and content, like, share, and subscribe both my channels, this first channel and my second channel, Stock Investing Made Easy. Because both channels have just one heart and one goal: to help you reach your goals of financial freedom via investing in the stock market. Now let's go into the meat of our topic. No one has a crystal ball on how they can project and predict on how the economy is going. I posted several videos also about how the stock market could possibly recover, what are the things that you need to look at from a technical analysis point of view to figure out how will the stock market reverse from a particular downtrend. Please remember, by the time this video is being made, there are a lot of stocks still that have not recovered, that have not rebounded, that have not reversed. Those movements, you can see it also based on the sentiment of how people are proceeding in terms of buying and selling a stock. And you could also see it by the inflows of foreign funds. If foreign funds are leaving, you already have a context or at least a pretext that, hey, it will be harder, it will take longer before it could possibly recover, because we need foreign funds for our markets to push up and go higher. So context also of all of this is, why are we not moving as fast as compared to other countries and other markets in general? Please do remember though that the stock market is not the economy and the economy is not the stock market. Though at times that the stock market has been a leading indicator on what's happening in the economy, similar to what happened to the 2008 recession, when we saw the markets drop first, then economic data showed that the economy hit a recession, but right after that, we saw the markets already bottom out. As they start to bottom out, we saw the markets continue to push up and push higher. Then the economy also followed suit. That being said, I just wanted to say that the stock market, though at times where it seems so bad, it seems not as good, but those are the times also that the stock market is bottoming out. Because please remember, and I'll say this over and over again, stock market leads the economy. It's a leading indicator. But there are times also that it's decoupling. when markets are hitting all-time highs and jobs are being lost, when markets are hitting all-time highs and the unemployment rate is at a very, very high pace. But that being said, just to give a deep dive and a direct answer to the question, I want to say that there are four types of economic recovery. So based on the question of Leah Victoria, she was mentioning about the V-shape and the U-shape recovery, but there are four, at least four that's widely used and widely referenced. So the four economic recoveries are a V-shaped recovery, then the U-shaped recovery, then you also have a W-shaped recovery, and then you also have an L-shaped recovery. In this video, we're going to go through them also one by one, and we're going to talk different bits and pieces of it so that you can compare, and then later on, you get to see where's the Philippines on this, and you can see the trajectory. Are we in a V-shaped recovery? Are we going to do a U-shaped, a W-shaped, or an L-shaped recovery? Of course, people like it when the market, the economy recovers faster. So if I'll put a ranking system on this, a hierarchy, the worst type in terms of rank is the L-shaped type of recovery. Then you have your W-shaped type of recovery, then U-shaped, then V-shaped is what investors love the most. So let's do this. Let's start with V-shape. As described by the letter, is a V-shape, meaning you have a very, very steep fall, but as it falls massively, the recovery also is very, very steep and very, very fast. It bottoms out very, very quick. And this is what investors like, because if you try to notice it, steep downward move, meaning also when this is happening, even prior to this, the markets already have dropped massively. And as it starts to recover, of course, everyone likes to see good economic data. Everyone wants to see companies earning more, doing better, and then it provides additional positive sentiment for the stock market. In terms of duration, the recovery of the economy happens in just a few quarters. Start very, very fast drop, hits bottom, then it starts to recover. While we're doing this, I want you to imagine where are we? Where's the Philippines in the grand scheme of things? This video is at August 2020. The recession was declared for the first 2 quarters of 2020. So check it out. See if third quarter 2020, fourth quarter 2020, first quarter 2021, are we on the road to recovery? Next, U-shaped recovery. By the letter U, it's already telling you that there's also a stark drop in the economy as compared to a V-shaped recovery. It takes a longer time for it to recover. It does not bounce up quickly. It takes a longer time to recover. If in the V-shaped recovery, there were measures that were done to address unemployment, to address probably inflation, to address whatever pending issue was there, a U-shaped type of recovery, in terms of length, this could be around 12 months to around 24 months. So if we recover in less than 12 months, it still can be pegged as a V-shaped recovery. But if it drags on 12 months, 24 months, then it could be pegged as a U-shaped recovery. I guess one of the eras where you can research more on this is you can go to the US recession of 1973 to 1975 to study what were the underlying factors that caused the markets to drag longer as well. Next, third type is the W-shaped recovery. What does that mean? A V-shape is it drops down, hits a bottom, then starts to go up and starts to recover and goes higher. So one thing that I'd like to point out is it becomes a full recovery is after the V-shape, it hits the same point as where it was before, but it goes higher. The same also for the U-shape. It drops down, goes to a certain level that it's the same already before the recession even happened, then it starts to go up. For the W-shape, you have a steep drop and it forms a V. While it's at the moment, at the point where it's almost the same as pre-recession levels, it starts to go down again steeply, then it starts to rebound again, and then after rebounding, it forms a W, then it goes back to its trajectory. That's what a W-shaped recovery means. They're also called double dip recessions. Now, you may ask, why does that happen? Why does it have to be a W-shaped recovery? So, there's a recession that happens, measures were made to make things better, but while it starts to go up again, probably there were causes, there were still issues that were not addressed that caused the economy to continue to fall and go down again. Or, similar to some eras in the past, Another type of issue or recession caused it to go down again. An era that you can look for in this is the 1980s US recession from around January to July 1980. Then it recovered, but after recovering, it went into another recession in 1981 and 1982. So double dip. Comment below if you're learning. Comment if this is something that's helping you. Comment if this is something that will give you also proper understanding on how the economy works, on how everything works, on how you as an investor gets informed on what's happening and how you can also trade. Next one, and not the most ideal, is what you call an L-shaped recovery. As suggested by the letter and the figure, L means a sharp drop. Instead of doing like a letter U where it recovers fast, the recovery is very, very slow, very, very hard, and it may take years upon years upon years before it recovers. It could even be a decade before growth is even seen. Some people also call this a depression because the road to recovery is long. Similar to what happened in the Great Depression in the US, unemployment hit 23% and there was not much growth. Growth was stagnant in that particular era. So please remember, an L-shaped recovery is characterized by a very slow rate of recovery in the economy. This is the most harmful in everything, in all of the four shapes that I've mentioned. Unemployment is very, very high. It's scary in a way because if they won't be able to bring back old jobs already, there might be industries, there might be businesses that because of the depression, because of the long cycles of things being bad, those businesses may not be able to recover. Hence, jobs that were there before the recession are not going to exist anymore, are not going to be there anymore. So again, this happens when there's a steep decline in the economy and there's no road to recovery, or there's no steep road back to recovery. You can also reference, if you're looking at it in history, the Greek recession of 2007 and 2016. For those who were invested already at that time like me, it was always in the headlines at that time. People were talking about Greece exiting the euro. If there was Brexit a couple of years back, there was Grexit at a much longer time before. So that was that period when the Greek economy wasn't doing so well. I don't know what the future will hold. I don't know also what will happen to the Philippine economy, but I hope it's not an L-shaped recovery because it will drag on and it will take longer. And sayang because prior to this pandemic, prior to this recession, our economy was surging, moving, pushing hard, pushing strong. So I want to know your feedback. Where do you think we will fall? Do you think the Philippines will be a V-shaped recovery, U-shaped recovery, W-shaped recovery, or an L-shaped recovery? Where are we in the grand scheme of things? How will we recover? And you, as a stock market investor, trader, what will be your plan knowing this new information that I'm giving you? So I hope you guys learned a lot. If you did, appreciate it if you can like, share, and subscribe this so there's more and more Filipinos who will be knowledgeable about economics, about investing, about the markets. And if you like this and you like more technical analysis videos, my second channel, Stock Investing Made Easy, is made just for that. And if you're asking, Marvin, how do I learn more about the stock market? I have 5 books in Shopee. They're in the description below. You can click them. Basics, Technicals, and Fundamental Analysis. I also have video collaborations with Chinkee Tan and Sean Si talking about the markets all together, talking about the basics, how you can start investing and trading the markets with confidence. Then I have a community in YouTube. It's also in the description below. You can join that if you want to be part of the growing community that we have. For those who want to invest in US markets, the link is down below for eToro. Click that and you can trade US markets for $50 only. Tesla, Microsoft, Google, Amazon, Nike, Disney. And it gives you diversification also from where you are. Imagine you're trading Philippine stocks, but you're also diversified, trading and investing in the US markets. Here's the thing. They have 0 commission also. I hope you guys got a lot from this, and I hope that this is something that gave you as much value and content as possible. For those who want to support this channel, we have a Patreon link also below, and I hope that we give you as much value every day to help you trade the markets with confidence. So I hope you guys got a lot from this. This is Marvin Kermo, and I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.